Good morning, welcome back. You're watching the Small and Mid-Cap Show on NDTV Profit. I'm Hersh Sayta, and we'll continue conversation. We'll try to break down what various brokerages as well as research heads are speaking about, what they believe the big trends of 2024 are going to be like. We'll focus on 2024. And today with us we have Siddhartha Khemka of Motilal Oswal. He's the head of retail research, and he's going to help us to try and get perspective on where markets are at the moment and where he sees markets by the end of this year. So sir, my first question was right there. Take it away. What's your sense with regard to where markets are at, how valuations are looking like? We saw a stellar run up in December. Can that continue in 2024?
Yeah, thank you so much, Harsh. Wishing you and all the viewers a very happy and prosperous year ahead, 2024. So if you look at in terms of markets are at all-time highs, but the good and interesting part is that the earnings catch-up has been so strong in the past few years that valuations are still comfortable. Despite market being at the all-time high levels, if you look at Nifty PE, we are somewhere about 19 and a half times on a 1 year forward PE, which is comparatively at a little discount to the last 10-year average of 20 times. And if you look at the earnings catch up, last 2-3 years, we have seen an earnings growth in excess of 20%. And the asking rate for the next 2 years, including FY 24-25, is about 19-20%. So that's kind of a very good situation to be in. If you look at India, sits in a very kind of a sweet spot where both the macros as well as micros are looking pretty good. Indian GDP growth would be one of the highest in terms of the top 10 global economies. And if you look at the earnings potential growth, the first 2 quarters of FY24, we have seen a very strong growth of 25% plus. And the asking rate for the second half is much lower if we were to go by the overall expectation of 20-22% earnings growth for the current financial year. So I think markets would continue to deliver the earnings related returns. So our expectation is that one should expect about 15% to 18% annualized return for the next 2 years from Nifty, given that valuations are comfortable, the macros are pretty stable, and earnings continues to deliver.
Very interesting. It's a perspective that we don't often get, that despite this significant run up, you're still well or marginally below your 10-year average price to earnings valuations, and Motilal expects a 20% earnings compounding going forward as well for the next couple of years. And if any rules of investing are to go by, your typical earnings is what you will get in terms of returns as well. So fairly valued is how I would assess how I would call out your assessment. But sir, talk to us about the small and mid caps, because this is the small and mid cap show. So help us break that down. 50% nearly in terms of returns, both from small and mid cap benchmarks in 2023. Where do we go in 2024 in your view?
Yeah. So if you look at very interesting junction we are at. So while the Nifty has given around 20% returns in the calendar year, the mid and small cap indices are far outperformed, giving much higher returns of about 35 and around 50% return. So if you look at in terms of valuations, they are trading at a premium to their the 10-year averages. But what is interesting is that we have seen a lot of sectoral rotation in the market. Some of the niche segments that have been doing well. And one key area that we see is the core industrial sector that has picked up like anything. So this is being driven by the government capex, which continues to do well, and with the expectation of political as well as policy continuity, this is a segment which should continue to do well. And there are a lot of sub-sectors, sub-segments within that space, which we believe to do well. So I think it will be a mixed bag kind of thing for the mid and small caps in 2024. But again, the good part is we need to find those pockets where the earnings growth are consistently being delivered, and that is where investors would get rewarded.
Right. And you gave me a good framework for my next question. So what are those pockets of good valuation and growth that you are seeing at the moment?
Yeah. So I think if you look at one, I talked about the core industrial sectors. Within that, if you look at capital goods, infrastructure, railways, defense, these are some of the sectors which are witnessing a very strong growth in terms of earnings order book. Another segment that we are seeing a very strong growth is the discretionary spending. So if you look at the headlines, auto companies had record sales during the festive season. The real estate sales has been on a tear. We are seeing almost 8-year, 9-year high record bookings for real estate segments, and especially in the premium and luxury segments. This is the first time that we are seeing. Otherwise, generally, we see that the mass market or the affordable housing generally tends to do well. But this is the first time where we are seeing the premium and the luxury segment in the real estate doing well. So discretionary spending is another space that we believe would do well. Some of the other segments that we like are the niche segments, for example, the electronics manufacturing, because of the PLI, because of the focus of Make in India, they are gaining share. Some of the new age fintech companies are gaining share. People are traveling more, people are going on holidays. So that is another segment which we feel within the discretionary space will do well. So hotels, hospitality, real estate, some of the real estate linked stocks, these are the space that we believe should do well in 2024.
Right, and you've sent me some of your picks, but before I go there, I want a quick 30-second on trying to understand two things. One is you've highlighted certain big themes of 2024, so those are good to know. But where do you see a valuation catch-up which could happen along with some of these big theme plays? We saw the likes of a PSU bank do a big catch-up last year, as well as part of 2022 as well. Is there some pocket where you feel that there is a valuation catch-up plus a theme which will play out in 2024?
Yeah. I think, Hersh, you rightly asked. Valuation is the name of the game in the market right now. PSUs as a whole, not only the PSU banks, but all the public sector enterprises, we witnessed a lot of catch up in terms of valuation, and that is an entire pack where we still see a lot of headrooms in terms of the valuation, for a room for further re-rating. So starting with the public sector banks, we believe that the journey has started with the ROAs now sustainably above 1%, and you look at the valuations which were earlier trading at a discount to book value are now closer to that 1% mark, 1 times book value. Some of the leaders in the pack like SBI, Bank of Baroda, Canara, we are now expecting the ROAs to further improve from now 1% to 1.2%. And SBI being the leader, they have now given a guidance that the ROEs would be reaching to 20%. And if you look at the valuations, still comfortable at a big discount to some of the private players. Other spaces, for example, the commodity spaces, where I think, especially in the public sector enterprises, companies like ONGC, Oil India, Coal India. So there is a huge room in terms of valuation. They are still trading at discounts. For example, ONGC is trading at 4.5, 5 times. Coal India is trading at 9 times on a price to book. The earnings growth have improved, volumes have gone up. And to top it all, the major factor is that return ratios are improving across these spaces. So I think these are some of the pockets where especially in the public sector enterprises space, where we'll continue to see valuation re-rating along with improvement in the financial performance.
Right, and within real estate, I find two names which you've given us. One being Kajaria and one being Sunteck. Kajaria, of course, not direct play on real estate, but Sunteck being a direct play. So talk to us about this entire real estate game, because what we've seen is rates have gone up now. Have we seen a peak here?
Yeah, so Harsh, I think if you look at ideally in a rising interest rate scenario, real estate should not do well. But that has been the reverse what has happened. And what I discussed some time back is that especially in the premium and luxury segment, growth has been pretty good. So that is a segment where they are less sensitive to the interest rates. And now, when the US Fed is talking about 3 rate cuts in 2024, RBI has already taken a pause and will further take cues from the US Fed. And we could see some interest rates cooling off by the mid of 2024. The other segments, which are more the mass segment, which are more sensitive to the interest rates, I think the demand will start coming in. So yes, in terms of certain pockets within the real estate space, stocks have moved up. Value, while we are positive on them, valuation wise, there is little room for upside. There are certain pockets where I think the valuation is yet to catch up and will do well. So Suntech is one of that name. While we continue to like companies like Lodha and Godrej Properties, which are our preferred picks, but as I said, valuation wise, there is room for Suntech Reality with the improvement and change in financials. Their focus on the luxury segment, which is where a lot of growth is happening, and hence, as I said, that is a space that we believe could do well, especially with the terms of growth that we are seeing in their micro market. Now, coming to Kajaria, again, after we are seeing that demand is expected to pick up in the second half, aided by good traction, especially in the real estate space. The company themselves have guided for about 14 to 16% growth, and that's a good proxy play to the entire real estate growth. So we are expecting a 26% earnings CAGR over the next 2 years. Return ratios are very strong in excess of 20%, and balance sheet continues to remain healthy. So all this put together, we believe that Kajaria, among the ancillary plays to the real estate, could do well. And even on terms of valuations, we see a good 20% upside from current levels.
Right. Thank you so much for all of that perspective. So actually, that's all the time we have today. We're completely out of time. But thank you so much for all of that perspective from, of course, you as well as the larger house. And of course, wish you and everyone in your team a very happy 2024. I look forward to interacting with you more this year. Thank you so much.
Thank you. Thank you so much. Wishing the entire NDTV team and all the viewers of NDTV a very happy and prosperous 2024.
Thank you. Thank you so much, sir. Right. So that was, of course, Siddhartha Khemka of